Business owners sell low instead of selling high. When their business is doing its best, that's when they don't even consider selling it. The reality is, the more you scale, the less efficient it gets, right? So when you say, I want to try and double my business, the odds are it's going to be much less profitable and much higher risk if you're trying to do it purely through marketing. We can double your business practically overnight for almost no risk and for almost no money.
Marty M. Fahncke is a business leader, investor, and M&A advisor who has helped companies scale past $1 billion in revenue and executed over $450 million in acquisitions. Known as the adventurous marketer, Marty brings decades of expertise in growth, strategy, and business exits.
One little part of that particular product, it was a bolt that wasn't strong enough, and it triggered a $30 million recall, practically bankrupted our business. Always having your business ready to sell, even if you never plan to sell it, you're going to be in much better shape. And I will tell you, nobody plans for those things, but that's what kills 90% of businesses. And we identified the main reason of those are 5 Ds and a B. And the 5 Ds are...
Hey everyone out there, my name is Alan, CEO of freecashflow.io. Welcome to Profit Powerhouse, the podcast where we sit down with inspiring business owners and entrepreneurs to uncover the secrets behind their success. We're here to learn what drives their growth, the challenges they overcome, and how they master their finances. Our goal? To help you achieve the same success while maximizing your profits. Let's dive in. Today's guest is in the business of buying, selling, and scaling the companies shaping our digital economy, and they do it on a global scale. Representing everything from ecommerce and SaaS to marketing agencies and service-based business, Westbound Road is a powerhouse M&A advisory firm known for turning complex deals into clear strategic moves. Whether you're looking to exit, acquire, or scale, their mission is simple: create jobs, grow companies, and unlock exponential growth for every stakeholders involved. Our guest today is part of a team with decades of real-world experience, razor-sharp strategies, and a future-focused mindset. They've been through every scenario you can imagine in the merger and acquisition world, and now they're helping entrepreneurs and founders make bold, informed decisions in high-stake moments. Marty, welcome to the show.
Wow, Alan, thank you so much for that introduction. My gosh, that's like, I need to hire you to create a teaser reel or a sizzle reel for our business. That was wonderful. I hope I can live up to that.
You deserve every word of that. You're the deal maker, right? The master tier behind all of this. So, Marty, for those who don't know as much about you, can you just share a little bit more about your background? What really inspired you to start your business?
Yeah, absolutely. So I started as you mentioned, decades ago. I'm an old guy, but I am an old guy, but I do try to stay on top of the new tricks. So I actually started out decades ago in direct response, meaning television and call centers, actually. So
Wow.
a long time ago, there used to be these things called infomercials, and they'd say call now, and then you'd have a toll free number. And I started out in that business and did really, really well with that business. And what was interesting was that, that was television and telephone as kind of the marketing and the response mechanism. When the internet came along, and I recognized pretty early on that this is the next level of it on steroids, and this is going to allow people to buy and transact, and we can sell products directly to consumers, which is what I've pretty much done all my life. I was among the earliest pioneers of e-commerce, and started one of the very first affiliate programs in 1999, which was,
Wow.
I think there were 2 of us with affiliate programs. It was like 1-800-Flowers and me. So,
Oh.
so I've been doing, I understand the e-commerce business. I've bought and sold a number of e-commerce businesses. I've grown e-commerce businesses from 0 to 30 million, 0 to 80 million. I grew one from 80 million to 300 million. So I've been doing this a long time. And then through that, I discovered acquisitions as a powerful tool to kind of bolster what my passion has always been marketing, but I found acquisitions as kind of the extra juice to make everything grow even bigger, better, and faster. And so that's kind of what we're here to talk about today. So that's kind of a big picture history of my background. But I've done about $1 billion in revenue on e-commerce, and I've done about $500 million in mergers and acquisitions transactions. And so I've learned a few things along the way.
Absolutely amazing, right? What a journey, right? Especially from the 1-800-Flowers comparison. Marty, what any I would say like pivotal moments, what ups and downs you kind of faced during this journey? Our listeners love listening to that.
Oh my gosh. I've had lots of both. Ups being, I mentioned some of the, successes that I've had growing businesses and scaling and having some really amazing opportunities. My career has led me to be able to meet with a lot of great, celebrities and very powerful and influential people. But I've had a lot of downs. I've had marketing campaigns that I've carefully crafted and meticulously planned out and then executed and spent a ton of money on, and then they've bombed completely. I had I had one product we did that turned out to be a huge seller, and one little part of that particular product was a weak. It was a bolt that wasn't strong enough, and it triggered a $30 million recall. We actually literally had it out there everywhere. We had it in retail stores, and overnight we had to bring back $30 million worth, and it practically bankrupted our business. So, I've seen the good and I've seen the bad, but I wouldn't trade any of it for anything. So,
Wow. Yeah, yeah. Quite a lot of decision making that's happened behind the scene, I'm sure, every time those things happen.
yeah, for sure.
So Marty, can you kind of share how do you kind of determine the true value of a business, right? Especially in fast moving industries like, SaaS or e-commerce here.
Yeah. So, that's always the question people ask, right? What's my multiple? What's my value? How much is my
Yeah.
business worth? And so I want to make it clear that there is no one number. There is no set number. This is what your business is worth. You'll people see headlines of, oh, so and so was acquired by so and so, and they see some crazy number, and they're like, oh my gosh, that was a 17x multiple of revenue and whatever else. Well, what they don't see behind the headlines is what was the deal structure of that. It probably wasn't a cash deal. It was probably a lot of earnouts, maybe in a lot of equity. It may have been all sorts of terms. That the reality is maybe it wasn't quite what it seems. So, um, multiples are or valuations of a business are a number of factors. Obviously, its trajectory. Is it growing or is it shrinking? Obviously, the marketplace. Is what's the size of the TAM compared to what it's already hit penetration? The longevity of the business. What are the founders putting into it as far as time and energy? Is it a hands-off business that runs by itself, or is it something that the founders are putting in 80 hours a week? That's a big difference. And those are the differences people don't often think about. So there are a lot of factors that can affect, the value of your business. Obviously, the more solid it is, the more it's growing are going to be important things for you to increase the multiple. The other thing is that a lot of people are still stuck back in 2021 and 2022, especially with SaaS when there was this crazy high, blip in SaaS multiples. And, I try to correct people. They say, "Oh, well, SaaS multiples are down quite a bit since, 2021, 2022." That's not actually true. If
Oh,
you look at the trend line, SaaS multiples are actually steady or a little bit higher than the previous trend lines. We just had this crazy blip that is probably never gonna happen again, and everybody still tries to value their business on the blip. You can't. You gotta look at it on what the trend lines are. But valuations are actually fairly steady year over year if you take out the crazy year. And it's we're starting to get far enough away from it that people are starting to not try and rely on that for their valuation. But I still see it. Well, in 22, somebody offered me $20 million for it. Yeah. What are you going to get today? So you've got to be realistic as far as what you're really bringing to the table. And you have to look at it from the buyer's side. If the buyer acquires your business, how are they going to be able to extract an ROI from their investment? And a lot of sellers don't think about that. All they think about is, well, I've done this and this and this, and I should be able to get this much for it, or I've put this much into software dev or whatever else. But they have to look at it from the buyer standpoint. If the buyer, if the buyer's going to pay you $10 million for your business, and it would take them 25 years to realize a return on that investment, do you think they're going to buy the business? No, they're not. They have to be able to justify that. So, and they probably have to go out and borrow the money to buy your business. The lenders are going to look at that as well. They're going to say, here's how much we're willing to lend you for that business based on its current cash flow. That's going to impact valuation. So you have to look at it from what the buyer's looking at and what their return on investment is going to be, what the lender's willing to take as far as a risk, because most of the time there's a lender involved somewhere along the way. as well as what the opportunity of the business is. Everybody, founders always want to say, well, there's great potential here, or there's great opportunity, or this is what, it's going to do in a couple of years, which is great, but you can't guarantee that cash flow, and therefore you can't necessarily borrow against it, and you can't necessarily guarantee an ROI against it. So it's going to impact your valuation.
Wow, what a great insight, Marty. And thank you for coming on, debunking that common myth about SaaS valuation, because I hear that all the time, right, in the news right now.
Yeah, you hear, oh, they're down. Well, look at the chart. It just went up 1 or 2 years, and then it's just back to normal. It's really all it is.
Appreciate that. What
Yeah.
would you say, Marty, is the biggest mistake kind of founders make when they're preparing their business for sale?
Oh my gosh.
It seems like there's
So
a ton.
the biggest mistake I would say that founders make is not preparing early enough. And when I say early enough, there's two definitions of early. So one is we tell founders you really should be preparing 3 years before you're ready to sell. And the reason for that is because it takes time to position the business for sale, to do those processes that we talked about. Like, founders need to be, have a team in place, and operating systems in place and everything else, and also your financials. So there's something that I'm going to love to talk to you about because of what you do. But a lot of founders, especially of mature businesses, maybe not so much growth businesses, but mature businesses, they manage their business very aggressively on tax mitigation. I talk to a lot of founders like, oh, I have, I do, $3 or $4 million a year, but I make no profit, so I make no, so I don't have to pay any taxes, and I do this, this, and this to kind of mitigate my taxes. That's all well and good. The problem is, if you are going to sell your business, it is going to be valued on a multiple of your profit. So if you have a revenue generating business that's not generating profit, guess what the value of that is? It's going to be,
Not much.
something close to zero, right? So you have to switch, and you should do it 3 years in advance, from a tax mitigation strategy to a profit maximization strategy. And that's something that a lot of financial planners and whatnot, often don't think about is, okay, maybe it's going to be okay to pay a little extra in taxes, because that 20 cents we're going to save in taxes by taking that dollar and allocating it towards profit. And then if that dollar becomes a 5x, well, now you're saving 20 cents, but you're losing $5 in valuation. Where's the smart move there?
Yeah, no, exactly. We always ask our client, hey, what is your outlook for the next 5 years, right? Are you looking to keep growing your business? Or are you looking to sell, right? That makes a big difference in how we do tax planning.
Yeah, exactly. So preparing in advance is very important. It's a mistake that I see founders that they just don't do it enough. And the other thing is always having your business ready to sell, even if you don't plan to sell it. And the reason I say that is because we get calls every single day here. And I'm not exaggerating. Every single day we get contacted from somebody who's has to sell their business, but they never planned on it. And we've identified the main reason of those are 5 Ds and a B. And the 5 Ds are divorce, disease, death, debt, disagreements, usually partnerships, which is very common. Those are the 5 Ds. And the B is burnout. And I will tell you, nobody plans for those things, but that's what kills 90% of businesses.
Wow.
And so if you contact me and say, hey, I have cancer and I can't work anymore, or I'm getting divorced and my spouse, I have to sell the business and split half the proceeds with my spouse, or I've got a partnership that's gone bad and this partner wants to leave and I don't want to, or vice versa, whatever those reasons are that we get constantly. If you have not prepared your business for sale, then you are at a disadvantage. You are not going to get the value for the business that it could have otherwise. You're going to be in a hurry and make bad decisions. So always having your business ready to sell, even if you never plan to sell it, you're going to be in much better shape. And that's a mistake that a lot of business owners make. Here's the cool thing about it. If you have your business ready to sell, that means your financials are always in order. You've got a great operating system in place. It means that as an owner, you are above the business and not in the business, working 80 hours a week. It means that you are, focusing on profits. It means that everything's running smoothly. That's the kind of business that a buyer wants to buy. Well, guess what? If you as the owner have your business running so well that any buyer would want to buy it, it also means it's running well for you. It's more of a joy to own, and it's going to be a pleasure to operate, and it's going to be more profitable, and it's going to give you a lot more peace of mind than a business that's chaos and flying by the seat of your pants. So even if you never sell your business, having it prepared to sell at all times, A, protects you against damage from the 5 Bs and the B, and B, makes it a better business for you to operate while you have it.
That is so smart, right? How do you avoid burnout is not to get burned out in the first place because you're working the 80 to 100 hours, right,
Exactly.
into it. So if you have smartly allocated your business, you have, key employees, I would say, like working all those segments that's burning you out. You're probably like on a beach somewhere operating this business, right? And they're saying, this is wonderful. What? I don't even need to sell anymore,
Yeah,
right? And I have
exactly.
no idea, I didn't no idea, Marty, that the letter D is such a cursed letter, right? When you're naming all those things out, I was like, death, divorce, disease, disagreement. I missed one D.
Debt, which is
Debt.
getting in financial
Yes.
trouble, which
Yes,
is
yes,
which
yes.
we're
Right.
seeing a lot of lately. We're seeing people that are overextended in their businesses, and it's causing some
Yeah.
problems,
It's
so.
it's still pretty easy to get credit these days, I would say, right? Especially
Yeah,
for a good
yeah,
business. And so it's very easy to fall into that trap.
yep, it is.
Um, yeah. So like, how do you advise a business owner, Marty, where like you're kind of caught in between, right? They're like, I don't know if it's a good time to sell my business. I don't know if I should be just growing it a few more years. Is there any key indicators in your mind that, when you're talking to all these, these clients that's hitting you up every day that you're like, hey, not yet, wait a few years, or otherwise, no, this time, this is right for selling.
Yeah, so there's a couple of things here. So number one is you want to sell when you're on top. Now, how do you know when you're on top? That's always the tricky part, right?
Yeah.
In the financial world, there is a simple saying that is powerful, simple, but difficult to do, which is buy low and sell high, right? In the investing world, buy low and sell high. Oddly, most business owners and entrepreneurs do the exact opposite. When their business is doing its best, that's when they don't even consider selling it. And then it's when something happens that eventually, every business has peaks and valleys. It's when it hits the valley that then they go, oh man, I can't do this anymore. And that's when they start thinking about selling. And I see it 99% of the time is they business owners sell low instead of selling high. So first of all, consider going out on top. If your business is doing really, really great, and I can tell you dozens and dozens of businesses that I've consulted personally, not just on acquisitions, but I do, business coaching and advisory and strategic growth consulting. I've worked with business and I've looked around and said, now is the time to strike while the iron is hot. You should sell your business right now. And the owner will look at me and go, are you kidding me? Things are great. And I say, I know. That's why you should sell. And they say, no way. And a year later or 2 years later, they call me and go, "Oh, man, you were right. I wish I would have listened to you. I just left millions of dollars on the table." I've seen it time and time again. The other thing that I see, and this is gonna be very controversial, but the other thing that I see, if a business owner is asking that question, if an owner's saying, "I wonder if I should sell," my experience has been that the answer is always yes. And I'm not saying that for myself because, like, I want them to sell through. I don't care if they ever work with me or not. But here's what I've found. If you own a business and you are passionate about that business and you are excited every day to get up and go and make big things happen with that business and you're rocking and roll, the thought of selling never crosses your mind. What I've found is that if the thought of selling crosses your mind, that it triggers something in your psyche,
Oh,
and it becomes exponentially more difficult to, have that spark to get out of bed and to go to the grind. And so I've noticed that business owners who just, I'm just maybe gonna entertain the idea. The majority of the time when that happens, they lose a bit of their motivation, they lose a bit of their spark, and that's often when the decline really starts to accelerate in their business. And so I now tell owners, and I thank you for asking these questions, that if you are thinking about selling your business, that is the sign that you need to do it and do something different that you can be passionate about again. Because if you put your blood, sweat, and tears into this, you've grown this baby, and the thought crosses your mind that maybe I'm done with this, even if it's a tiny thought, it will germinate and grow quickly, and it will sabotage you from success. And I've seen that probably 9 times out of 10. So the question, should I sell or not? If it pops into your head, the answer is yes.
Wow. What a bold statement there.
I
I,
know.
I love it. It makes sense. It makes sense. And when we use explain it like that, right? Usually if that is something that they're thinking about, there's other factors in play, right?
Mhm.
That kind of led to kind of that thought bubble even forming.
Yeah,
So I can see that.
yeah.
That's pretty incredible. And then speaking to the other side, Mari, since you're both in both the buying and the selling world, what are the kind of financing options if you're a buyer in this market, right? That's kind of available to you, and how does that kind of affect the deal structure you have seen?
Oh, there's so many ways to fund an acquisition, that, ranging from, corporate debt to, SBA, to, leverage buyouts, to, management buyouts. We have actually 230 different ways of funding a deal, and we actually literally have them on a
Oh,
spreadsheet. And so when we look at a deal, we say, "Okay, what are all the applicable ways of doing this?" Whether it's inventory-based financing or asset-based financing or whatever. And we look at all the ways, because when we're trying to structure a deal, we're trying to make sure that the seller is getting what they want and the buyer is getting what they want. And a lot of times, just figuring out the financing part of that can be the most difficult part. And so that's part of the strategy that we bring to the table, is helping to figure all that out. Every scenario is different, so we don't work with a lot of kind of individual buyers that are just looking to buy their own business. That's, I mean, we most of our businesses are larger, so they don't fit that. We do primarily strategic acquisitions, that are, like I talk about, how to double your business, without having to sell more stuff. And, specifically as it applies to like e-commerce, if you're doing $5 million a year today and you want to double your business to $10 million, a year or two from now,
hmm
the normal way of doing that is the way I did it for 20 years, which is like, let's go out and double our marketing, and let's go out and create more campaigns, and let's go out and bring on affiliate. And the problem is, when you try to scale a business through marketing, is that you'll start spending marketing dollars that become less efficient, right? You take risks, right? You have to hire more people that may not work out. You have to do marketing campaigns that may not work out. You're going to spend ad dollars that, you know, Meta loves to help you spend your money less efficiently. They say
Oh.
that's more efficiently, but the reality is, the more you scale, the less efficient it gets,
Yeah.
right? So when you say, I want to try and double
Oh,
my business, the odds are it's going to be much less profitable and much higher risk if you're trying to do it purely through marketing. But one of the things we work with our clients to do, we say, look, we can double your business practically overnight for almost no risk and for almost no money. Well, how do we do that? Well, if you got a $5 million e-commerce business, then you can go buy another $5 million e-commerce business. Boom, instant. You've got their customer base, you've got their product lines, you've got their email list, you've got everything, and the risk is taken out, because, or substantially minimized, I should say, because they're already an existing business. They already have the customer clientele. They already have an online reputation. They already have everything built in. You don't have to go and guess whether some marketing campaign is going to work. You can buy that business that already has existing marketing campaigns that are working. The cool thing about that is, you have a $5 million business, you buy a $5 million business, you put the two together, now you have a $10 million business. It is possible to make that acquisition literally for not one single penny out of your pocket, because you can leverage that, and you can borrow against the cash flow of that acquisition, and you can acquire a profitable business for nothing out of your pocket, and boom, you've doubled your business. Minimal risk, maximum profit, minimal outlay, and that's the kind of deals that we like to structure and help our clients structure. So, yeah. So when you talk about, how do you fund deals? Well, there's 230 different ways we can do it, and there's probably more beyond that. And every deal is unique, but finding somebody who can help you strategically structure those is important. You don't just It's not always just about going to the bank and borrowing the money. Sometimes there's a lot of other ways to do that.
that's incredible, Marty. I'm getting excited here. I don't even have an e-commerce business myself, but just hearing you talk about it in a way could just double your revenue just overnight like that, it must be so exciting for folks out there to hear right now. Um, and then Marty, talking about how amazing those Facebook ads are. How do you go about acquiring customers? Do they just come knocking your door? It seems like just calling you night and day, or at least earlier on, how did you get them to work with you?
Well, so I have multiple businesses, so the answer is different depending on which business that we're talking about. For my acquisitions advisory business, we really have two ways that we acquire businesses or acquire customers. One is referral and word of mouth. That's our strongest, and we're pretty limited in our clientele, so we're not like trying to get thousands of clients. We're very specific who we want to work with. I have a very unique name, Marty Fahncke. I'm the only Marty Fahncke in the entire world. You Google Marty Fahncke, it's me. I can't hide. I have worked hard to maintain a stellar reputation in the business world for 30 something years now. I try to provide a great value and a great service for my clients, and so they bring lots of business to me. That's our number one source. And then number two are podcasts, just like this. I love teaching and sharing information with business owners and entrepreneurs. And so when wonderful podcast hosts like you have me on and I can share some of this knowledge, people hear it and they reach out to us, and those work really, really well. My other businesses, I have a marketing agency, we have e-commerce, we have a lot of other businesses. It runs the gamut. I'm a huge fan of affiliate marketing. I've been in the affiliate space for almost 30 years now. So we use affiliate, especially in our e-commerce businesses. We really love affiliate marketing, which is, for those of you who don't know, it just in case, that's, where you bring on an advertising affiliate who promotes your products or services, and they get paid when they create an action, whether that's a purchase or whether it's a lead form or something like that. They get paid on an action. And so I love affiliate marketing because it allows me to reach audiences that I wouldn't normally reach with my own marketing, and it kind of minimizes risk a little bit because somebody else is actually bringing me the customer, and I don't pay until I actually acquire the customer, which is wonderful. So that helps from a cash flow standpoint too, because traditional advertising, I'm going to spend the money with Meta or Google or somebody, then I'm going to have the transaction and then get the money, and then so it's backwards, right? Like I'm spending money first and then I'm making. With affiliate marketing, I make the money and then I pay the advertiser a month later, so I can maximize my cash flow. So I love that. I mentioned Meta. I mean, that's obviously you have to be there. You've got to be depending on your marketplace, TikTok. Um, we're always looking at it, and actually for us, email marketing is still very, very strong. I've been hearing that email marketing is dead for probably 15 years now, and yet it still is incredibly powerful us across pretty much all of our platforms. Email continues to be very, very powerful. So I don't know. Those are some random thoughts from various businesses I've got my fingers in. So
No, amazing, Marty. I mean, and knowing that your number one source is word of mouth and referral really says it all, right? About your business reputation and what your current customers think of you and why they want you to expand, and make sure all their friends and families also work with you when they want to sell their business. So
yeah, for sure.
that's a credit to you, and
Thank
I'm
you.
sure having a unique name also helps in that way, right? You don't have to compete
Well,
with nine different other Martys
yeah,
in
it's
that
good that they
line.
can find me, but it's bad because they can't figure out how to type it to find me. So it's a double whammy.
That's a good one. Marty, I think we have touched on this topic, especially in this day and age right now, right? Obviously, AI is kind of transforming all lives and industries and services that we were all part of right now. Would love to get your thought on how AI is kind of affecting what you guys are doing as a firm, and really how your customers should be using AI going forward.
Yeah. So how AI is affecting us as a firm. Obviously we engage a lot more AI tools now than we did before. Obviously, before they existed. We try not to rely too much on. We don't rely on too much AI driven content or anything like that. But we are using a lot of AI driven tools. Whether it's I mean, I'll say one game changer for me has been meeting notes. I have a Zoom meeting. I used to have to try and take notes or whatever. And I love the fact that all my meeting notes are just automatic, and, I can just go and pull them up and search them. But we're always staying on top of every AI tool that's out there and how we can implement it for the benefit of our projects and our clients. From an acquisition standpoint, we had some very interesting times happen. So we actually had an AI business on the market for sale before the release of ChatGPT, and whenever that was, October of 20, what year? I don't know, two, three.
Yeah,
When did
I think
ChatGPT
around
come
that
out?
time.
Yeah. So we had an AI driven business on the market, and then of course ChatGPT came out, and all of a sudden the whole world was like everything AI, and it was crazy. We had this business kind of on the market, just kind of sitting there, and all of a sudden like 500 people wanted to buy it because it was an AI business. So that was kind of interesting. We're seeing a lot of kind of quasi AI businesses that are really just kind of businesses that are wrappers. They've wrapped a business around, some of their core AI, business, and those can be tough because you're building a platform or building a business on somebody else's platform, which is always dangerous to do. So from an acquisition standpoint, most AI we work primarily with mature revenue generating profitable businesses. Most AI businesses are kind of early stage VC funded, and that sort of thing. So we don't play as much in that space because it's just a kind of a different world. But man, it's just the revolution that we're seeing in the last 2 years. Like I said, the internet didn't exist when I started in business. I was putting stuff on TV and selling on the telephone back when this started. Then the internet came along, and I recognized, and I said, this is going to be massive, and I've jumped on it and embraced it ever since. AI is just as big of a game changer as the internet itself. I mean, it is none of us have a clue. Everybody that makes predictions, they're probably off by, exponentially in under predicting and over predicting the impact that AI is going to have on our businesses. Just you need to be paying attention to the benefits it can provide your business. You need to pay attention to how your competitors might be leveraging it to crush you. I don't necessarily agree that every business makes sense to go all AI, all in, completely. Don't fire your entire customer service staff and replace it with an AI chat, but you need to be testing modalities. You need to be understanding how it can impact your business, and again, how your competitors are using it in their businesses. I guess that'd be my thought.
Yeah, absolutely. I mean, I think I read an article the other week about, I think it was Wall Street Journal or something, about how like they believe that AI will kind of replace or transform at least 75% of current jobs on the
Hmm.
market today, right? Like
Yeah.
it won't be in their current form. And that's a scary number to think about, right? A lot of
Yeah.
people not being able to do what they do, and especially if they're stuck in their ways and not embracing AI, they're kind of going to be falling behind in the next 5 to 10 years here.
And I don't
So
think there's a sector that's immune outside, I don't know. And even
outside
even
of a
even
plumber or
doctors,
someone
right?
like
Like
that,
eventually
right?
doctor we'll just go get an AI scan, and it'll just tell us what's wrong with it. Like I don't know that there's an industry that's completely immune. And so it's really those who understand how to embrace it and leverage it that are going to be successful and not be afraid of it.
Absolutely. Marty, you're obviously now a very wildly successful business owner, right? An agency founder. What would you say is kind of like your key to success now, right? In your business and personally in the next 5 years? Is there any thoughts in your mind of hanging up the hats or anything like that? Or you still stay pretty motivated to keep going here?
So years ago, I decided that my idea of retirement was to own 10 businesses in 10 states, and to spend my time on a motorcycle just visiting each business for, a few days at a time,
Oh,
and whatever else. I'm proud to say that I'm a good portion of the way there. I now own 3 motorcycles. I spend a lot of time, traveling. I own multiple businesses around the world. My idea of retirement is not playing golf, and eating buffets on cruise ships. My idea of retirement is continuing to add value to my businesses and the businesses of my clients, and I love what I do. It's exciting to me. I'm still excited to get up in the morning and do what I'm doing. And so, yeah, I don't ever anticipate stopping. So
amazing. But it sounds like you might also need to invest in a yacht, Marty, since you have business around the world.
I'm not a
Some
big
of those
I'm not a big
some of those
water
that
guy.
motorcycle might not be able to reach is all I'm saying.
I'll buy
Or
a
plane.
plane. I won't buy
Yeah.
a yacht. I'll buy a plane.
Okay.
So
You faster travel like that. That's
yeah,
smart, Marty.
exactly.
Yeah, I would love to hit you with a fun question, Marty, before we get to the more serious topic about financial management, right? So here's my fun question for you, Marty. So if one day a rocket ship landed in your front door, and inside is a treasure chest containing gold bars valued at $1 billion, right? If you have $1 billion today, what would be 3 businesses you acquired with that $1 billion? Would it be known that that $1 billion expires at the end of 30 days?
Okay, so I have 30 days to buy 3 businesses with
Yeah,
$1 billion.
and that maybe well-known ones in the world, or maybe even,
Holy
hidden
moly, that's
gems
an
that
interesting
only
question.
you know about, that you're like, "Hey, if I had money, I would definitely buy up this business," but, you got free money here, $1 billion.
Wow, that's very interesting. I would I mean, $1 billion doesn't actually acquire a whole lot. Like, it's not gonna be any name business you've
Yeah, you
ever
can't go
heard of,
buy
right?
in Meta, right? Yeah,
You can't
exactly.
buy Apple
Yeah,
or whatever
yeah.
else. So, I would probably say, first I would look at something in the, um, healthcare or elder care tech space. That's a space we play in, and it's just so ripe for continued growth. I mean, as the population gets older and healthcare and everything else is more and more demand on that, senior care, et cetera. I would probably, but I don't want to necessarily own a business that requires, changing bed sheets and things like that. So, I've seen some really great opportunities in the healthcare tech space that I think could be leveraged to maximize that growth. So I'd probably look at something in there. There's actually a couple businesses I know about that could be available there. Um, and again, AI, like, what could AI be layered on top of that to make it huge? Even though I'm a marketing guy, and even though I own more than one marketing agency, I probably wouldn't invest in any marketing businesses right now. I think AI is going to revolutionize and change that space in ways that we have no idea in the very near future. So I would not probably invest in that space right now. And then probably another. Let's see, what other man, that's a really tough question. Outside of healthcare tech, I'd probably I'd probably look, I know what I would look for a business that I can confidently believe will help people with loneliness and depression, whatever that looks like. We are in an unprecedented time of isolationism. We've never been more informed but less educated and more connected and more lonely than we are today as a society. And I don't know what that business looks like, but I would probably put the most of my $1 billion into a business that I was confident could help people live happier lives, more connected lives, more grounded lives that and reduced depression, anxiety, and loneliness for everyone. And that's a lofty goal, and I don't know if that business exists, but I'd find it.
That's really cool, and it's great to know about some of the trendings that you're thinking about is gonna happen ahead, right, as you're investing in a smart business that you believe in. Yeah, that's very interesting, right? So I heard a lot of stories about, how ChatGPT just introduced their new model, the 5, right? But then a lot of people are depending on the last model because they treat it as a therapist, a friend, right, even a companion, right, back then. But they're saying there's a personality difference now between the 2 models, which is the new one is more like business-like, professional, and they don't get the same feeling with them anymore.
Yeah,
So I can totally see where you're coming from on the whole, the world being a little bit more antisocial and lonely, right, these
yeah.
days, right? Even turning up to an AI chatbot basically
There you
to
go.
get
Yeah,
that feeling
which
back.
is
Yeah. So you're, I think, right
fascinating when
on
you think
the
about it.
mark of what's needed out in the
Yeah.
marketplace.
Mhm.
Cool. Yeah. Thank you for that. Great fun answer there, Marty. So,
Wow, thanks
um,
for that very thought-provoking question. I have never had a question like that before.
I mean,
I
yeah,
really had
hopefully
to
maybe
think
do
about
some ideas of what you should be looking to acquire right next.
Wow.
So here in Profit Powerhouse, we love to what we call nurture long lasting businesses. It seems like you have the same goal there, Marty, right? And with that, we would love to always dig into our guests' thoughts on how they approach financial and tax management. So that's my question for you. How do you approach managing the financial side of your business, Marty?
Yeah, so I'm glad you asked that because when business owners come to me and say, "Hey, I wanna sell my business," I will tell you that, um, 70 to 80% of the time, their financial practices and their books are in shambles. And, So first of all, I would just say encourage every business owner that you need to make sure from day one that you have rock solid, accounting practices. You're keeping your records up to date, accurate. Your allocations are correct, everything else. And then from a tax strategy, we touched on that earlier about, whether you're focusing on tax mitigation or profit maximization. But it's something that so many founders and entrepreneurs just kind of poo-poo, and they wait too long to hire a bookkeeper, and then they wait till too long to hire a controller, and they wait too long to hire a CFO, and so, I am not a numbers guy. I'm a marketing and creative guy, and so I hate all the numbers stuff. And so I speak of this from experience because if I'm in charge of the numbers, bad things are gonna happen. So I need to put somebody else in charge of the numbers sooner rather than later. And most business owners are like me in some degree. So just making the conscious decision to do it right from the beginning is very important. And then the other thing is it just totally random that just popped into my head is that and I'd love your thoughts on as well. Is just the offshore onshore. We work with a lot of international businesses, and some of them are international because they were started internationally. Others are international because they were moved internationally for tax and regulation purposes and things like that, where their customer base may be domestic in the United States, but they're located in some other country. That can impact deal structure. So you need to be thinking about that. One of the tenets that we talk about when we're consulting on acquisitions is the one of the 7 habits of highly effective people, which is begin with the end in mind, right? So
Mhm.
if you are doing something with your business as far as like, moving it to a tax haven or something like that, that may help you today, but will it harm you when you go to exit your business later? Is there, you need to be thinking about that. Who's going to buy your business and why? And what do they want your business to look like when they acquire it? Those are important questions to ask. And whether from your tax strategy to your domicile strategy to, everything else is you want to build your business to make the person who is going to buy it eventually happy. So be thinking about those things. That's something most people really don't think about.
No, absolutely. Like when we're advising even a client on our side, one of the first things we tell them is, are you looking to sell, right? Like what are your kind of your end goals for your business? And the end goal is to sell in that 3 to 5 year horizon. We have a whole different kind of tax strategy we're advising them on. Also business structure, right? It is usually not every time. I usually it's good advice if it can keep some sort of U.S. Business entity, right? Be a LLC or C corp on that side, so that if they do end up selling, it's easy to spin off at that point, right? Whether they don't have to kind of take apart their business or just sell some assets out of their business, and that just complicates the deal, right? People like
Yep.
clean deals, right? They like
Yeah,
saying, hey,
exactly.
they could like to put it on that deal sheet. I'm acquiring this LLC and it's a US entity, right? And then these are the books and these are the assets under it, rather than, oh, I'm just gonna dig out a part of your business and try to buy it from, right? Makes it much more complicated and higher attorney,
100%.
much higher attorney fees, which I'm sure you have seen, right? When
Yeah.
they need to structure it that way. So,
Yeah.
Marty, my next question is any kind of cool tax write-offs or financial metrics you have seen over the time in managing your own business?
Oh, cool tax write-offs?
Oh,
I've
doesn't that be
seen some.
cool? Can be fascinating. Can be very helpful, right?
I the one that pops into my mind is a
Mhm.
terrible one, unfortunately. But it's I mean, there was a line item on a P&L recurring, different ranges, but recurring that, and I still to this day can't believe it was on there, but it was basically uh, every year, the business wound up settling sexual harassment charges with college age interns because the
Oh,
owner of the business could not control himself. And it was a budgeted line item every year to pay sexual harassment settlements.
what do they call that line? I'm just very curious what
It
they
was it
name
was
that line.
it was legal
Intern fund?
legal consulting. It was under legal consulting or something like
Okay.
that. But
Yeah.
we were like, what is well, yeah, it took some digging to find out what the truth of that was, but they were literally just payouts. And we're like, I don't know. That's certainly not cool, but I've seen some crazy stuff out there. It was just fascinating to me that the board allowed that and the legal it's like I don't know. That's crazy. But I've seen some wild stuff out there on on P&Ls and line items. So
I think what people are curious about, Marty, is if you're willing to disclose, did they end up selling the business despite having that kind of line
they did
item?
not. They did not
Ah,
sell the
okay.
business.
So
That business was that owner is still in place. I don't know that it's probably unsellable, honestly, because it's so toxic. It's a
yeah,
toxic business,
okay.
and I don't
So
know
for
anybody that would be
business
crazy
owners
enough to
out
buy it.
there, if you're gonna do something like that, just be prepared for your business to not be sellable in the
Right.
marketplace. So a warning
Yeah.
to have those out there, right?
Yeah. Exactly.
uh, Marty, that's fascinating. All the great value you have already brought to this podcast. I'm sure people have learned a lot just from hearing you talk for the last 30 minutes. What's next for you and your business? Any exciting plans or projects on the horizon here?
We've recently kind of upped our game as far as the types of projects that we bring on is, we used to work with a lot more kind of entrepreneurs and smaller businesses, and the size of our deals has grown quite a bit. We focus mostly on kind of, 10, $25 million deals now. We used to do a lot of like $3 to $5 million deals. And we've found a niche there that's kind of interesting because, there's kind of three levels of acquisitions advisors out there. So the basic level is business brokers. People know what business brokers are. And they're great for, your gas stations and laundromats and whatever, things like that. And then at the high level, you have investment bankers, and investment bankers are, they're names, and they're very expensive. They're
Yep.
a huge team. They're gonna do a whole lot. And then in between, there's kind of this gap that's kind of been left unserved that called the lower middle market. And we found this niche that's just like, oh my gosh, we are inundated with owners who are looking for either to exit or they're looking to grow through acquisition, either one, whether which side of the equation. But there aren't a whole lot of options out there for advisory firms that can help them with that. They're either too small or too big. And so we've kind of settled into this really great niche in the last year and a half that we're really enjoying. So I see that going on more and more. I'll continue acquiring businesses. I get constant, calls from business owners looking to sell, and some of them we bring on as advisory clients, and some of them we don't. A lot of them we don't bring on, and then some of them I look at and go, "That's a really great business. I'll just buy it." And so I'm always looking for interesting opportunities there, or with business partners. So I see more of the same. I have a pretty good work life balance right now. I take a lot of time off to travel and enjoy time, and like I said, I mix it with business. And so I see more of the same in the next several years until I just ride off into the sunset one day on my motorcycle.
On those motorcycles,
Oh,
right? On
yeah.
the three motorcycles you have. That's awesome. Glad you have it all planned out. So
Yep.
Marty, in the final segment of the podcast, we have what we call the final advice. If you could give one piece of advice to someone just starting the entrepreneur journey, what would it be? One, two, or three simple steps to kind of get them off that couch, right, and get them going in today's world and become a successful entrepreneur, just like yourself, Marty.
Yeah. So somebody actually gave me some advice when I was 17 years old, and it changed my life. And I continue to live by it to this day, and it's applicable even though it's old advice from somebody who's no longer even on the planet anymore. But there's a very famous motivational speaker named Zig Ziglar, and he had a saying that you can have anything in life you want if you help enough other people get what they want. And I learned that, and I've applied that my whole life, and I found it to be true. I spend my time trying to serve and give knowledge and information and, talking with you and your audience and really sharing and giving. And I get everything I want by doing that. And so if you give first without even expecting to receive, if you just give, you will receive. And that's my advice.
That's incredible. Just simple statement. You can have anything in life you want if you help other people get what they want in life, right? And sharing and giving has been a great theme on the show, Marty. We appreciate everything that you have shared with us today on the show. But there's an exciting giveaway that we can't miss before we end the show here. Marty, do you want to tell the audience what that is for the first 10 listeners out there who click on the link that we're going to apply in the show notes below?
Yeah, absolutely. So you asked a question early on in the interview. How does a business owner figure out what the value of their business is? And it's the first question. It's the number one question we get. And the answer is it's very difficult to do that. But we do a valuation service. It's $2,500 for a standard business valuation. But yeah, for the first 10 listeners who reach out to us at westboundroad.com, and there's actually a button up there for business valuation, westboundroad.com. The first 10 listeners from your show will do that for free and give them a $2,500 business valuation. And I'd love if I could also talk about my book really, really quick. So I wrote a book. This is again, this is for giving, right? I have had so many business owners contact me who were unprepared, and I found a lot of them were older. And so I wrote a book called Boomer Sells the Business, a step-by-step guide to cashing out and living large. Hit the bestseller list 2 months ago, number one Amazon bestseller in the valuation and mergers and acquisitions categories. But I wrote this really as a labor of love. So if you know and by the way, don't let the name fool you. The advice in this book is good for any business owner of any age or generation. But it's just good, solid advice for how to plan and prepare your business for sale, whatever stage you're in. And so I'd love for people to check that out. It's available on Amazon as a Kindle, hardback, paperback, or you can go to boomersellsthebusiness.com. But that is, if you know a business owner who's maybe thinking about selling, send them a copy of the book as a gift. But I'd love for you to share that as well. So
Awesome, Marty. Yeah, congratulations on all the success on the book. And like Marty said, doesn't matter if you're Gen Z or Gen Alpha, you can all read that book and learn a lot of value from Marty about business acquisitions.
exactly.
Marty, thank you so much for being on the show today. It's been such a valuable insight into the world of M&A. We would love to have you back in a year. Maybe have more stories to tell about, college interns and the
I'd
likes.
love to be back, Alan. Thank you so much for having me on the show. It was my pleasure.
Everyone out there, thank you so much for listening. We'll make sure to drop all the links and relevant information in our show note below. And don't miss out on Marty's offer at a $2,500 value, probably one of the most valuable promotionals that we ever had on this show. So appreciate that. Marty, thank you so much again. Guys, peace out.